CVP example number 2, we're going to calculate the break-even point not to just break even or achieve a profit of 0, but to achieve a specific desired profit. So to do that, let's look at an example. We'll call this example 2. Mike's Bikes manufactures bicycles with the following costs. We'll keep all the data the same. The metal frames are 100, the rent's $2,500 a month, the tyres are $40 per bike, the gears are $160 per bike. The utilities are $500 per month, and the wages are $3,000 per month. Mike plans to sell these bikes for $800 each. So what we'll add in now is that he, each month, wants to achieve a desired profit of $2,000. How does that affect the two questions that Mike wants answered? How many bikes does he need to sell each month to achieve a profit of $2,000, and how many dollars of sales is that? So to do that, we firstly divide all the costs into fixed and variable. And we'll say that fixed costs are the ones that don't vary with the level of sales made, and variable costs are the costs that do vary with the level of sales made. So based on that, we take the metal frame and we say that's variable. The rent is a flat rate per month, that's fixed. The tyres and the gears are variable. The utilities and the wages are fixed. And we end up with total fixed cost of $6,000 per month and total variable costs of $300 for each bike. So now we have that information, we can calculate our contribution margin. Our selling price less variable costs was $800 selling price, less variable cost of $300. That is a contribution margin of $500. Now we have all our info, we can plug that into our break-even point in units formula. We'll take the fixed costs plus the desired profit, and we'll divide that by the selling price minus the variable cost. So we'll say in this case fixed cost was $6,000, desired profit was $2,000, the selling price is $800, the variable cost of $300, so we end up with $8,000 divided by $500, and that is a break-even point to achieve a desired profit of $2,000 of 16 units. We could have also saved some time there and just put in the contribution margin. So we take the same formula, we just take the fixed costs plus the desired profit and divide by that contribution margin. We'll end up with the exact same number. Second part to it was, well, how many sales is that in dollars? We call that the break-even point in dollars. So we'll take the selling price per unit and we'll multiply that by the break-even point in units. So we sold each unit for $800. We said to achieve that level of profit, we need to make 16 sales. 800 times 16 is 12,800. So now we can answer Mike's two questions. First one, how many bikes does he need to sell to achieve a profit of 2,000? That's 16 units. And secondly, how many dollars of sales is that? That is $12,800 of sales.